My name is Natasha Phipps. If you don't know who I am a team leader of the Phipps Real Estate Group in Calgary, Alberta. We're with CIR Realty. We're a team of investor-focused realtors. We do residential, commercial, and property management in-house here in Calgary. And we love real estate. And every single month, we do some sort of event, usually with a bit of an investor focus in mind, but we like to take that investor angle to all types of real estate, regardless if it's for a primary home that you're buying. So hopefully you will get some value out of that. We would love to have you at future events as well. So please, if you enjoyed this event, hopefully we will see you again in the future. We are joined tonight by very special guest, VIP Anne-Marie. Anne-Marie is the chief economist of the Calgary Real Estate Board. And given its first quarter of the year, we're all sitting here going, okay, where's the crystal ball? You know, I get asked every single day, how's the real estate market? What do you think is going to happen? And so it's really important that we take some time, look at the data and see what we think might be in store. And that might impact how you move through the year, how you choose to buy, sell, or invest. So Anne-Marie is going to kind of deliver her housing forecast for 2023 to us. And at the end, we can hopefully ask some questions as well. So I'm going to turn it over to her right away and we'll get started here. So I'm going to stop my screen share. I'm going to highlight you here, Anne-Marie. We'll spotlight you. Thank you so much for being here with us tonight.
Thanks for having me. Okay, so I'm going to go ahead and just share my screen. So I think, and okay, make sure I hit that share button so you can all see it. So I think the first thing that I really want to talk about before we go into like what my expectations are for the year, is to understand where we came from. So, I mean, 2022 last year was actually quite an exceptional year in Calgary, especially compared to other markets in the country. And I'm going to touch on that as well. But what we saw happen is that sales activity hit a new record high. So despite the fact that we had rising interest rates, we still had really an exceptional year. And part of that, I mean, I had expected that sales would be really strong last spring with a bit of a pullback in the second half of the year. But we did not expect a new record this year. So really strong level. And what happened is while listings were starting to rise, it wasn't enough. And our market actually still remained really tight. So one of the stories that we've been, kind of talking about is this lack of inventory in the market. So we've continued to see inventory levels really remain quite low, really tight conditions, and we had price gains. So we continue to see some really strong price gains. Now it was, again, stronger than we had anticipated last year. I mean, I had expected prices were going to grow in 2022. I didn't expect a 12% gain in terms of overall prices. And again, part of that was because of what happened in the spring. So, I mean, if we think back last spring, we started the year with very limited inventory levels. We knew people wanted to get into the market before all of the rate gains would happen. And that ended up with sort of that activity that was like bidding wars and things like that. And it caused most of that price gain to happen really from January through to the high, which was in May. So that's when we saw all of the price gains in the market. Prices did start to trend down a bit in the second half of the year, but nowhere near enough to offset the gains that we had. Now, what was also interesting is just the dynamics in our market. So in Calgary especially, we are traditionally, much more weighted towards detached homes. What we saw last year is we're starting to see a bit of a shift, right? So all of a sudden, and the reason why our sales hit new record highs wasn't because of what was happening in the detached market. That's where we saw some pullback in sales, really perfectly in line with, our forecast numbers. But those sales were offset by the exceptional growth in both apartment and row properties. And I'm going to go into this in much more detail because it is impacting the market that we're seeing today. So that's kind of like a quick highlight, and I'll go into some more detailed trends soon enough. And it wasn't just in Calgary. So, I cover the whole province. I cover Saskatchewan as well. So, this was something that we were kind of seeing more so in Alberta, and it wasn't just in Calgary. We were seeing improved activity across a lot of parts of the province. I think Fort McMurray was the one exception. Even in our areas outside of Calgary, they actually performed even stronger. So, we looked at areas like Airdrie, Chestermere, Strathmore, those areas, they've had no supply and they continue to struggle with supply. So they've had price gains that are even higher on the city of Calgary. I don't want to spend too much time on that because I think there's a lot of other interesting things to talk about. So I think what I want to do now is I just want to take a step back and just talk about what's happening in the economy on a broader base. So we know that, we are in a very different world today than we have been for some time. I mean, really, the pandemic created such an economic shock. And we're still feeling the effects. So, I mean, when we think about what happened early days with the shutdown of the economy, we had so much fiscal and monetary policy. So fiscal policy in terms of government spending. So the emergency response and things that were being done at the time. And then the Bank of Canada dropping their rates. Well, that really, in combination of the fact that, demand recovered sooner in the overall economy than was expected, right? So we're having supply shortages. We had all of this stimulus, and really that resulted in some of the inflation that we're seeing today. So it's that contributing factor that we've seen inflation levels come up, and it took a lot to go back and see when's the last time we had inflation like this. I mean, we haven't seen inflation at these levels since before they were actually, before their policy was to control for inflation, which was back in the early 90s. So this is really a very different environment than most people are used to seeing. Now, at the time, even last year, the expectation was inflation was going to be temporary. Because supply would start to readjust, adjusting for demand, because we know that there was some challenges with supply disruptions. And then the reality became that, this is not a problem that's going away very quickly. So that's when we saw the Bank of Canada really start hiking rates. Now, rates are definitely much higher than I think anybody has seen over the past decade when we think about the rates, but they are not at the levels that we saw in the 80s. And I did want to point that out, is that even though they're a lot higher, and for many people, this is uncomfortable because they haven't been in this sort of environment, this is not record highs. Okay, so it is very different, and we are starting to see the impact on inflation with these higher rates. It is cooling, and it's doing what's intended to do. It's intended to cool consumer spending. Now, the reason why that they decided to front load the interest rate gains as much as possible was because our economy was basically in a situation where there was no, our unemployment rates were at record lows on a national basis. So by doing that, they're saying, okay, well, we know that consumers are going to spend, spending is going to start to cool, but what they're trying to do is avoid that type of recession that they had in the early 90s, where you had that sort of, we had a period of really persistent high inflation, and that took its toll on its economy, and it took a long time to recover. So they're trying to avoid that. And because we have such a healthy job market, in fact, a lot of job vacancies as well, that provides a bit of a cushion. And that's really supposed to prevent a far worse scenario than if they left inflation unchecked. So that's what we're seeing happen. But now, because we're in a scenario where consumer spending is expected to slow, that's what happens when you tend to have inflation. I'm sure everyone feels it when they go to the grocery store. They feel costs everywhere. It means that they have less money to spend in the broad economy. So that's expected to cause a bit of a cool down. Now, when that happens, and that's really where this concern over a recession is coming. Now, on the whole, the recession is supposed to be Canadian recession, and it's supposed to be mild and short-lived. With the higher interest rates, also came a lot of discussion over a housing correction and what that means for the broader housing market. Now, this is where I think that a lot of perspective is needed when we think about what's happening across the country. First thing I have to point out, Alberta is not Ontario, and we're not BC. We have very different conditions here for many reasons. First, when we think about what happened with prices, I think, we have to kind of look back and saw what happened in history. So I kind of picked a point of, well, what were we at 2014 till kind of pre-pandemic? I feel like everything right now is pre-pandemic, during pandemic, and post-pandemic. So before we hit the pandemic, Alberta was struggling. There's no question. We had the energy crisis that happened back in 2014. So our economy was in, a 2-year recession in 2015, 2016, even prior to the pandemic, we hadn't recovered. Our economy fully wasn't back to where we were in 2014. So we were in a very different scenario than a lot of other parts of the country. And it reflects in our housing market as well. We were having job losses, we were losing people to other parts of the country. And look what happened in our prices in our 2 larger cities. That time frame from 2015 to 2019, our prices actually went down. Whereas you compare that to places like Vancouver and Toronto, even Montreal, they saw significant growth. I mean, Toronto had 45% growth over that 5-year period. We weren't seeing that here. Pandemic hit, everyone felt the impact of the pandemic. Okay, so again, early days when you lower rates as low as you are, that naturally creates that increased demand for housing, and that's what we saw. Also, there was that added factor of people looking for more space, and all of that combined, we saw a lot of demand increase in all markets across the country. The difference is Calgary started at a place where we had lots of supply going into the pandemic, whereas markets like Toronto and Vancouver, they were already, facing not a lot of supply. So their price growth through that 2-year period of the pandemic was far higher than what we were seeing. So they had, yes, we had 24% growth over a 2-year period, but it's not the 54% that was seen in Toronto. So again, very different market conditions. Another thing to point out in Calgary where we're different is our prices only recovered from 2014 levels in 2021. So despite seeing that 24% growth, we got to remember that actually there was only about 12% growth in a 1-year period. So very different scenario. And even when we saw what happened last year, looking at 2022, we saw that the sales are decreasing in Vancouver. They're easing in Toronto. They're easing in Montreal. Calgary didn't see that. Like I said, we hit a new record high. We saw sales activity improve. Those other markets all saw their listings come off as well. Now we haven't had the same list, like we still had listing growth, and it wasn't quite enough, as I mentioned before, but a very different condition. So when people are talking nationally, and I hear it all the time, that there's a housing correction in the Canadian market. I said, well, hang on, that's a broad-based market. And we know that Toronto and Vancouver tend to dominate whatever those national numbers are because they're just much bigger markets than ours. But Calgary is not expected to see that same.
7.5 times 1.9.
Oh,
Someone's chatting.
someone's chatting. You're not muted.
So very different sort of scenario. Another aspect is look at the relative affordability. Now, this is something that I do feel is an advantage for our province. When you look at these prices, basically Vancouver and Toronto are, pretty much double than what it is in Calgary. And we're still one of the biggest centers in the country. So, we're smaller than Toronto, Vancouver, and obviously Montreal, but still this is a relative affordability and it does benefit our province in general. So that's one aspect to kind of keep in mind, that when they're talking about a housing correction, that's just not expected here. Okay, so most of that is geared towards those larger markets. So I guess the question becomes why, and what are we expecting to happen into this next year? So first of all, let me talk about sales. I do expect sales to come off of those high record levels that we saw. Is not a return to what we had prior to the pandemic. Another reason why we're very different. And that's in part because of our economy and other things that are going on, which I'll touch on shortly. But I did want to point out that, yes, I do expect as rates increase, that naturally kind of cools off housing demand. I don't expect us to be immune from that even here, but I'm not expecting us to go back to, sort of the conditions that we saw really from 2016 to 2020, because our market is very different place today than it was back then. Now, that being said, when we look at kind of, this graph on the right here shows you sales and it looks at it on a monthly basis. You got to remember, early this year, when you're looking at sales activity, it's going to look like there's some significant declines, just because we came from such high levels. I mean, we hit all-time record highs in early 2022. So those year-over-year adjustments are going to look pretty significant in the year, but that doesn't mean that we're falling down below those levels. So that's what I do want to point out, because I know everyone looks at these monthly reports that come out in housing. It comes out all the time, and they're going to go, well, but you said that sales aren't going to fall that much, but there's like showing a 40 or 50% decline. I'm like, put some perspective of just that period of time and what we went through in the spring. So I do expect you'll probably see some steeper sort of percentage declines early in the year, but still remain well above long-term trends. And I think that's really the key. So the question is why? Why do we think that this is going to be the case, and what makes us different than some of the other markets? First of all, on the economy basis, Canada is expected to be in a recession, a short and mild one, as I said before, but Alberta is not. Now, one of the fundamental differences in Alberta is our commodity market. I mean, the reality is commodity prices still remain relatively strong, and it still is the main driver of our economy. And the fact that we're commodity rich is something that's actually helping both Alberta and Saskatchewan, for that matter, having a slightly stronger sort of base. Now, another thing to note when I think about what I look at the economy, because our commodity prices are so much higher, we're in a far better situation than we were in prior to the pandemic. Not to mention that our energy sector has already gone through so many adjustments over that time frame that they're sitting in a very profitable situation. Now, they're not necessarily reinvesting in the same way that they did back in 2014. But we have to remember, as we have a higher commodity environment, we're also getting more royalty revenues. So that gives more money in terms of government. And we know it's an election year, and they plan on spending some of that. We know, there is going to be some additional spending coming in the healthcare sector and, other areas that they want to focus in. Well, that does still generate employment and other factors in our markets. So that's one aspect, because we're in a better situation in terms of our, provincial sort of coffers, if you think of it in that way. The other sort of risk, and when we think about risks of what impacts our market, I mean, we know that there's a lot of discussion over energy policies with regards to the environment. Now, this is actually something that I look at as it can be a significant upside potential for Alberta. You have the energy companies that want to do much more on environmental policy. They're wanting to work with governments, and if government can work really well with industry, and they're showing signs that this is going to be the case. This to me is an area of potential expansion and growth in our market. We have a lot of that technical skill base here in Alberta that are already working in the energy sector that can easily be transferred to expand into the more sort of green energy that they're talking about doing. So this is a lot of potential opportunity here. We're hearing it some with hydrogen. We're hearing it with a lot of different opportunities. If that can go, and I have to remind people, this is exactly how the oil sands developed in the first place. It was actually that partnership between industry and government that supported that growth in the initial stages. And if we can have that same type of partnership happen now, that actually could be a significant source of future growth. So that's the first thing I wanted to point out. Is there is still some risk with that. So that's kind of one of those things that I expect to continue to watch to see how that progresses over the next year. I am a little bit more optimistic on how that looks in terms of what's being done now today than when we were even 5 years ago. So I think that this is a source of opportunity. And that really will bring us beyond this next year. So if we think about that source of growth, that's going beyond what we're going to just see in the next year. That goes into 2024 and what we look like moving forward. Now, the next aspect to consider, when we think about housing. So again, that to me is, it supports a better overall economic environment than what we were in prior to the pandemic. The next factor is, of course, employment. People don't tend to buy homes unless they have jobs. And this is, again, another source of tremendous growth that we've had. Calgary has seen the most growth out of, most areas in the province. Kamloops, Drumheller is similar, but we're a much larger center. So we finally have recovered in terms of total jobs from where we were prior to the pandemic. Significant growth. Now, what is interesting about this is a couple things. Now, first of all, when I'm looking at this, We still have very low unemployment rates. We still have job vacancies. There's lots of industries that cannot find enough workers in certain aspects. So there still is areas where there is some growth expected. And even though, there is a slowdown that, even because Alberta will be impacted as well by less consumer spending. But the reality is employment growth is still forecasted for next year. Some job loss. We might not have as much growth as we've had over the past year, but we're not expecting any sort of significant change in terms of overall conditions in the province and in Calgary as well. So I think that's, again, points to just a better scenario than what we've been in. Now, what surprised me last year is where the job growth came. So, we knew that as the economy would reopen, that, you would see that sort of growth in things like transportation and warehousing and retail and, the social, like accommodation and food services, things that were impacted by social distancing. We knew that's where there was job growth expected. What was not expected was the growth that we had in professional, scientific, and technical services. These are higher paid positions, and it supports a stronger housing market. And I do think that this is something that will continue to weigh into the market next year, even though there's no growth expected in it next year, this upcoming year, but this will still continue to support a stronger housing market even into this year as those people kind of settle in and they start putting that money into the housing sector. So that's an area that was a surprise and to a benefit. Now, when we look at really where some of the main sources of growth are expected to be in 2023, a lot of that is in the healthcare and social assistance. Again, because as I said, government spending is expected to kind of be directed a lot at the healthcare system. Again, though, that's still creating certain levels of jobs and it's supporting a stronger market. When I look at this, I think, again, we've had a very positive scenario in terms of how this benefits housing as we move forward. I like to see job creation in areas that tend to be higher industries because it tends to support that growth. And from what I'm seeing, again, it's pointing to a much better market than what we dealt with. Now, the largest driver, as far as I'm concerned, as to what is impacting our market is the shift that we've seen in migration. And this one is significant. This is something I've been waiting for years, and now I'm finally starting to see a turnaround. So a couple things to note here. So if you look at this graph on the right, so we only have data from Q1 to Q3. Population data is always very lagged. The last quarter that we had, though, was an all-time record high in terms of migration. Over the first 3 quarters, we had over 100,000 people come into this province. 70,000 of them were international migrants. Now, some of that is due to the fact that, we've had, you've had some refugees come in. That is, boosting some of that international migration. But I think what had me a little bit more excited was the shift in interprovincial. We know that international migrants, that doesn't necessarily turn into home ownership right away. What it is doing is causing a shift in our rental market. And I think this is something that we are starting to see. Vacancy rates have been coming down. We've seen significant rental gains. Well, that's in part because you've had this huge inflow of people into our province. So this has really created a bit of a shift in terms of that rental market. And that does a couple things. When you have rental rates increasing, like the way that, again, data's not great on this, but I've been hearing, I'm hearing 20% growth in rental rates, depending on the source. But either way, this is supporting also increased interest from investors. And I think that is also contributing to some of the growth in housing demand, in part because when you have that type of jump, people are looking at it as, what can I do in terms of an investment? And it's enough to offset some of those impacts of the higher lending rates in the market. So I think that's what we're starting to see play out. And I think when we look at what's happened especially in our row and apartment condo sales, that big boost that we've seen in growth in terms of sales activity, that is in part, yes, a reflection of first-time buyers, but it's also a reflection of the investor demand. So I think, and that's partly why. Now, when I look at the migration numbers, another thing to keynote here is look at the turnaround in interprovincial. Okay, so we were losing people to other provinces back in 2015 timeframe. That's where we started to see people leave. And it's been a source of weakness, and it's actually really coincided with the slower sales activity that we've seen in the resale market throughout that time frame of 2015 right up till 2019. Now, COVID obviously was different. A lot of people were impacted in the COVID timeframe. We didn't see a lot of that at any time. The turnaround that we've seen in interprovincial, these typically translate into housing activity much sooner. Okay, so when I see more interprovincial migrants, this has a quicker turnaround in terms of home ownership. The other aspect to consider is where people are coming from. So province-wide, half of the interprovincial migration has been from Ontario. And we also are seeing a turnaround in terms of people coming from BC. Now, where I look at this and go, okay, typically, now it's not across the province, so we don't know how many are coming from Toronto, or let's say how many are coming from Vancouver. We don't know that specifically. But generally, if they're coming from a higher price market into Alberta, then that really does support a stronger sort of housing market in general. And I think that we are, they're going to be less sensitive. If you're coming from a market that's priced much higher than ours, they're going to be a lot less sensitive to those higher rates because your prices are much lower. So I think that's something that I'm looking at as an area of supporting stronger demand as we look at this next year. So another reason why I don't think that our housing market is moving back to where we were prior to the pandemic is because of this turnaround in migration. Now, Calgary, again, if we're looking specifically at our city, we don't have, we haven't done a civic census, so I don't know exactly how many people are coming specifically into Calgary, but even if you take the assumption at the lower end, that is still around 50,000 migrants last year that would come into this province, just in our city alone. That is going to support some continued growth, and that's something that I'm looking at as we move forward, and it's one of the reasons why we think our market is going to remain stronger. Now, when we think about, I've talked a lot about the things that kind of influence demand. We also have to consider what's happening on the supply side. Now, we know that new home activity tends to add supply to the overall market. Starts levels in 2022 did hit a new record high, just a little higher than 2014, but it was still a new record. So we had a record level of starts. Now, the natural question that comes is, well, you had that many starts. Isn't that going to add a bunch of supply to the market? Doesn't mean we have a risk of being oversupplied as those product is being completed. And I'd say, well, hang on a second. Now, when I look at those starts levels, I'm comparing it to what are our migration numbers? How many households are being formed? So if 50,000 migrants are coming into Calgary, even if you assume a 2-person household, right? So that would be at least 25,000 households formed, maybe less, even if you take it on the low end and assume only 20,000 households are formed. Well, if you're adding 16,000 units and you still have 20,000 households being formed, there's nothing there that's pointing to a lot of risk in terms of oversupply. And that's really, when I'm looking at it, what is the risk of oversupply? So I'm not seeing that on the front end, just based off how many migrants we have, how many households are expected to be formed, and how many new starts we had. So that's that aspect. Now we take into another layer because especially when we think about apartment condos, I mean, we've been here before, we've seen a high level number of starts. Back in 2014 was the last time we had like sort of these high numbers that we saw, but that was very different back in 2014. One thing I want to point out what's changed is, yes, we saw a lot of, apartment style starts, but this time 45% of them are rental. Back in 2014, only 10% of them were geared towards the rental market. Most of them were condo apartments last time versus this time where most of them are rental. So that is one of the big differences as well. So again, when we think about the impact on apartment condos, which, on an ownership side, that's where we start to get concerned. When you see that level of starts, is that going to be out of balance? Again, I'm looking at going, because more of them are geared towards the rental market, that reduces some of that risk in terms of having too much supply. So nothing there is pointing to too much supply on what I see from the new home side. Now, what I also wanted to point out, and I think this is going to be more relevant later when I'm talking a bit more about the different sectors of the market. In the detached side, this is where we have seen some improved construction in terms of detached homes. They still can produce detached homes in our market, but they are at the higher price point. Okay, so one thing to note, and I'm going to talk about this more, but there is a big difference in our market when you think about what's happening in different price ranges. And part of it is because, that supply that's coming on from the new home side is not coming in at the lower price points. It's coming in at a higher price point. So where you'll see the supply come in is at a very different range than it's not going to be in the lower range. So you're going to have different pricing trends depending on, the segment of the market, which I'll get into a bit more. But since I was talking about starts here, I thought I'd bring it up. So, when we think about supply first, again, summing that up on the new home side, I'm not seeing risk of too much supply into the next year because of our current sort of level of migration coming into the province. But we also have to consider what happens on the resale side. Now, this is where it's been kind of interesting. So it's not to say that supply can't increase on the resale side. I mean, what we tend to see happen is really a few things. As supply levels start to come down, usually that's because demand is starting to improve. That starts to cause some price gains. And as we get price gains, we start to see the response in terms of more people wanting to list their homes. You see the reaction on the new home starts, and then you start to see the supply adjust because we aren't a market like we have land. Okay, so we can add supply in terms of new home supply. We can do those sorts of things. So that is the difference. We do get supply response. It tends to take some time. But traditionally, when we have low supply levels, we tend to have price gains, right? I mean, and I have to say, like, that's one of the difference when when you're talking about people are, especially now, people are talking about significant price declines. I'd say, hang on a second. How can you have significant price declines when you don't have a lot of supply in your market? And that is, again, one of the differences here. I mean, we're not as bad as we were in the financial crisis. Prior to the financial crisis, we don't have that low of inventory levels, but they're still relatively low. And so again, this is supporting an environment where I don't expect to see that downward pressure on prices. I don't expect to see further price declines because of that, because we're starting from a place of very low inventories. Now, they were low last year, and I think even January numbers were a bit surprising. They were even lower than they were last year, which were pretty low. So we still have very low supply levels in our market. And when we have that, we tend to have very strong price gains. Now, what is different is the higher interest rate environment. Okay, we haven't seen interest rates, and this is Bank of Canada rate. This is not talking about what lenders are actually doing. This is just, here's what the overnight target rate is. This is similar to what we kind of saw really at the end of 2007, kind of prior to the financial crisis. We did have those higher rates. And again, that does cool demand. So when we think about the impact in terms of, that supply demand balance, this, I do expect that demand will start to cool, but not enough. But this will be something that will prevent, I don't expect necessarily a lot of price appreciation either because of that. Okay, because we're in a higher interest rate environment, it does impact the market. It does cool some of the activity. But because we're in already a low sort of supply level, I don't expect price declines either. Okay, and I think that is one of the differences. So, and I'm being kind of aware of time because I can talk about this for hours, so I won't. But
no, keep going. I think everyone is loving everything you have to say, so don't worry about that.
Okay.
You're doing fantastic.
I wanted to leave time for questions too, so I'm trying
exactly.
not to just talk the whole time. So on the whole, I am expecting that prices are going to be really quite stable this year. But within that, you got to remember that's a total residential price. I am not expecting that across all property types. I expect to continue to see gains for apartment condos, for row properties, that are more affordable end of the market. Where I expect to see the adjustments are coming in the detached side of the market, but again, not across all price points. So I think that anytime you're looking at a total residential price, and it's always a bit tricky when you're trying to, explain this when you're doing a forecast. It's like, yes, I'm showing it as being relatively stable, but again, early in the year, because currently prices are still lower than that peak level. So we did hit a peak. As I mentioned, most of that price gain was over a 5-month period last year. Our prices did slide down from that level, and I do expect them to kind of come up a bit still from where they were, but not be as high as what they were at that point last year. So on the whole, on a year, it's going to average out to being pretty flat. But even again, as I said, early this year, you're probably going to see some price declines and they're going, oh, what are you talking about? Again, you got to put reference over where we came from throughout the year and just the cycle throughout that year. Now talking about the detached side of the market, what I want to point out here, I fundamentally think there's a big difference in our market depending on price range. Okay, so what I expect is that, in the lower price points, so first of all, if we think about what's happening under 500,000, we saw a pullback in sales. So the sales decline that we saw last year, so there's about a 7% decline in detached sales last year. This is because there was no supply in the lower end of the market. Okay, so under 500,000, we saw sales activity fall because look at the listings fall too. There just wasn't supply choice in that segment of the market. It's exceptionally tight. It stayed tight. Like the fourth quarter, when you're under 1 month of supply in those price ranges, it's because there wasn't options there. So anything that's coming on in this segment of the market will still see price gains. It's still a very tight segment of the market. There's not a lot of supply choice. So when you see product there, this is an area where I still expect to see price gains. Now, in the 5 to 6 is where we're seeing things start to level off, but still relatively tight. It's not like we have a ton of supply. Even in this segment of the market, we're starting to see some improvements in listings. But it's not, it's likely to be, you might still see some price growth in these areas. Where I expect to see some price adjustments is in the upper end of the market. So this is where I'm starting to see supply levels start to rise relative to the demand that's there. Now, this kind of makes sense. As you have higher interest rates, less people can afford to get into these upper price points. So this is something that's cooling some of the demand in that market. And yet there's still some supply there. So this is the area that I expect to see some of the price adjustments happen, is in this upper point of the market. Now, other things to note on this, and I think you gotta, again, take this with some interest here, is that this is actually an area where there could also be some potential upside, depending on where our migrants are coming from. So I note this as this is the area where I expect to see this happening. On the upside risk of this is if our migrants truly are coming from the higher price markets, then their sensitivity in these price ranges is going to be a lot less than somebody who's a move-up buyer from, let's say, our existing market. So it might be harder for people within our market to move up. But if you're coming from a higher price market, then this might, when you look at it again, if you're coming from Toronto, if you've sold your home in Toronto and you're looking to buy here, well, you're not going to be as sensitive to that price, even though you have higher interest rates. So I think that that's something to note, and it's something I'll be kind of watching for this year to see if we are starting to continuing to see that shift in this segment of the market. On the whole, this is where I'm expecting to see price declines happen. If it doesn't, I would say that might give us a little bit more indication of where our migrants are coming from. Now, that being said, another reason to note of, why do I expect prices to decline in the detached side if, under 600 is where I'm still expecting price increases? Look at the shift in the share of activity. So one thing I pointed out here is, below 600,000, in 2021, that used to be almost 70% of our market, right? Now, that has shifted to half of our market. So very big shift there. And the fact that there's just a lot less product in that price point. So even though that, I am expecting some growth to happen in terms of prices in those lower ranges, I don't think it's going to be enough to offset the declines that are happening in the upper end of the market. So that's why overall I'm expecting some price declines in the detached market. But again, not much. We're talking like a pretty, if this is not the 20% range that some people are talking about, I'm talking about a pretty under 2% sort of decline in prices. And I have to point that out because, there are some, I just am not expecting that same sort of adjustment happening in our market because of the supply conditions. Now we are starting to see that, some of the higher points of our city, the West City Center, as of Q4, we were starting to see some of those shifts where their price growth wasn't as strong as what we've had. Now, they still increase at a significant amount. Overnight, those were pretty close to about an 8% year-over-year gain. That's still a pretty strong growth, but it is definitely coming off of what we're seeing, let's say, in the more affordable areas of the market, which had still recorded some significant gains in terms of year-over-year price growth. So there will be differences depending on where you're in the city and your price point and that local supply. And I think that, because our market is kind of going through a bit of a transition, from something that was really high, you have to be aware that there are going to be some of these differences depending on price range and property type and location. So I had to point that out. Now, when we think about the more affordable segments of the market, the apartment, the rural, the semis. The semis behave very much like detached product. They've struggled with supply and it's really kind of interesting because you have stuff that's, it's almost in two shares. Like you've got the lower price semi-detached, but then you also have higher price semi-detached. That really is that alternative for people in a detached market. You see a lot of that in inner city where, it's not in the 400 price range, it's in the 7 to 8s. So you have almost two different segments within that semi-detached market, similar to what you see in the detached side. Now they've been seeing their supply levels really start to come down in 2021, right? So they've been seeing, and this is a months of supply picture. So this is that relationship between supply in the market as well as sales. Those figures got a lot tighter in semi-detached first. So semi-detached and detached saw it first. Apartment condos, part of the reason why they've been so strong is because they've had so much more supply. This has been a market that has had price declines pretty steady from 2015 right up till the end of 2020, because there was a lot of inventory based off the demand, and their prices have still not recovered. Apartment condominium, these are ownership properties, have not recovered from the 2014 high, and that is not adjusted for inflation. Like that number looks a little worse if I adjust it for inflation. Okay, so they haven't even hit that stage, but because there was product available, we saw that demand really picked up. People had supply choice here. They had it, and we're seeing that now finally, that months of supply has kind of come back down and kind of hit into, below would see is the typical. So it was much tighter, and that supported some of that price growth that we saw in apartment condos as well. But they did have choice here. And so we saw a lot of that demand shift to apartment condos. We also saw it shift in the real properties as well. Now real property prices did recover from their previous highs, but again, they only recently recovered. So they just recovered last year. So this is an area where I continue to expect to see some growth. I do expect some supply to come on here. On the new home side, we are seeing a lot more of a shift, especially towards the row style product. So, there is supply that is expected to come on, not enough to cause a decline. So I still expect prices to continue to improve. This is an area that, it appeals to not just, first time buyers. It also appeals to investor buyers because of those price points, especially when you consider what rental rates have been doing. So I expect this to continue to be a source of demand growth into this next year. And to see that prices continue to rise in some of these markets. And again, I see very limited risk of any type of oversupply in these markets. So in fact, their supply levels still remain quite low. So it should continue to support some price growth early this year. And I know I went over that really fast. I just want to talk a little bit about things to consider, because with any forecast, there's always things that can drive it one way or the other. So I would say it's like the upside and downside risk. Now, in terms of sales, I do expect that sales, will be slower than the record high last year, just because we are in a higher interest rate environment. A lot of that pent up demand that kind of played its way through the market, especially keep in mind, a lot of people came in the market ahead of time before those rate increases came. So I do think that'll contribute to a slower sales this year. But on the price, this is where I think that there is that risk. And I think the risk is on the upside. I'm going to be honest, because we're starting from such a low supply level, and it does take time for that supply to come on. I do feel that it's very possible that our price growth could be much stronger than I anticipated. And I have that as the upside risk in part because we don't know what that number and type of migrant is. So that's that risk that, if a lot of these migrants are coming from higher price points and they're ready to buy, then that is an area that it could support much stronger price growth than we expected, because demand will be stronger than we expected. Okay, so that's the first aspect. If the supply levels do not come on, What we are seeing is construction times are much longer than they used to be. It's taking a lot longer to bring new product on the market. One thing I didn't mention is it's a lot harder for move-up buyers. So people who are existing in this market, typically what we see is that, as prices improve, they get into a higher price product, they sell their more affordable property. Well, it's harder for you to move into the upper part price point. Well, you're not going to see that same listing growth in the lower ranges of the market. So that actually could be something that could cause supply growth to remain relatively weak. If we don't see that supply growth, then again, I feel that we could have much stronger price gains. So if supply levels stay this low and continue to persist this low right in through the spring, then I don't expect to see that stabilization of prices. We could see further gains. So exceeding my expectations there. Another thing to consider is what's happening in terms of lending rates. Now, we know that, I think the general expectation is Bank of Canada is done raising their rates, but they're not expected to cut them this year. Okay, so the current thought is that overnight target rate is going to stay at these levels into 2024 until inflation gets solid under control. There's going to be, less risk to do that. What will be interesting is to see what lenders do if they start to change their spreads, right? What we have seen is that, there is a typical spread usually between, the prime lending rate and mortgage rates. If they narrow their spreads and choose to take less of a spread on those rates, then that might be enough that you could still see demand come in. So you might not feel that full impact in terms of those higher rates because they're narrowing their spreads. So I think that's something to kind of watch as we move forward to see what lenders will do, or will they start to ease their rates sooner in anticipation of what the Bank of Canada is going to do into 2024. That is something that could cause some later gains, especially if we think into the fall, because again, remember, we're doing a full year forecast, but things could start to shift by later fall, depending on what the lending market does as well. So that's something I'll also be watching for, is watching those spreads. Now, in terms of, on the other side, what could cause a steeper price decline? Well, this can be if inflation is far more persistent than expected and higher rates are warranted. So if they go beyond this 4.5% overnight target rate, so if they increase them more, then that can have a much more steeper effect. Another thing to consider is economic activity. We know that, inflation has been a challenge for many consumers. Now, granted, employment numbers still look good. People are still working, so that helps offset some of that impact. But wages aren't increasing at that same pace. So if consumer demand is really impacted more, and that consumer spending component really does curb more than expected, even in our province. So that is something that can actually cause, demand to pull back. And that's what we're really thinking about is can it be enough to pull back demand more than expected? Again, I don't currently see that playing out, at least into this next year. But that is something to watch for. And of course, the next aspect of, if price declines are going to be further will depend in part on listings on the other side. So the question has become is how many more people are going to become more of a distress sale? So, what we tend to see that happen more when there's higher unemployment rates. So people are unemployed for a longer period of time. We see those because they have to sell their homes. The question becomes is, can people afford the higher interest rates? Now, I'd also argue to a certain extent there was a stress test put in several years ago for a reason. And that does tell me that should limit that risk of default, because that's what we're talking about. Is there going to be, a jump in terms of, foreclosures and things like that? Not something that we're currently expecting, in part because there was that stress test that came in that should limit some of that. But that's something to watch for. So I'm not currently seeing that in listings, but that's what I'll be looking for, is if we start to see that large rise in listings, and if that demand's not there, if you see that steep gain. So kind of like if I think back to what happened kind of pre-financial crisis, if we have that big gain in terms of supply, that can do that. But again, not like it would take time. I'm not seeing that playing out into this year. I think if we start to see that activity, it'll start to become much more apparent by the fall. So that's what I'll be looking for there. I think for any buyer or seller in this market, you really need to be aware of the property type, the price range, and the location. You know, because we're in a market of transition, there are things that are behaving differently. So, you know, if you're in that lower price, if you're trying to sell a lower price detached home, you're going to face a very different market condition than if you're trying to sell a $900,000 home. Okay, so they're very different conditions, they're very different markets. And I think that that perspective needs to be given with anybody who's transacting in this market. And of course, the location will matter. We're still seeing very limited supply, especially outside of our city. You know, just on the outskirts of our city, because those tend to be more affordable products. So there isn't much product out there at all. So you'll have different conditions depending on those. And I think that that's really the kind of the key things to kind of look for in terms of risks that cause, you know, prices to either increase more or less. With that, I've hoping we have some time for questions and go from there.
Wow, that was fantastic. So many amazing points. Yeah, I'm just gonna not comment, let other people comment. I'm sure there's some questions. If you have a question, there was a couple in the chat. So maybe I'll pull those up. But if anyone would like to turn their mic on, you can ask a question as well. It is great. I could listen for hours, keep going.
I usually do this. This is usually like I had an whole over an hour to do this before, so I tried to get as many of my key points in as I could. But yeah,
Great info, absolutely incredible. I mean, you touched on so many great points. And to your point at the very end too, like there's no such thing as the Canadian real estate market or even the Calgary real estate market. You really have to get specific and niche down to whatever you're looking at. So I love that you touched on that. And also even talking at the very beginning about year over year metrics, like make sure what you're comparing actually makes sense, you know, because you'll see a headline like year over year, drop of 50% in sales or something like, you know, look behind the facts, right? So I really appreciate you taking the time to mention that. Ontario was talking about Alberta for sure. Absolutely. I think, Anne-Marie, in the last 18 months, I don't know if I've even gone a day without hearing from someone from Ontario in terms of moving here, you know, property management or buying or investing. So, okay, Anthony has a question. Anthony, feel free to just unmute and go ahead.
Sure, thanks. It was a great presentation, by the way. I really appreciate all the information. The only thing I was interested in as well was, do you have any rental or like rental rates and rental prices per month over, like month over month or year over year kind of like projections or anything like that? Because I'm sure like it's very hard to kind of get that information, especially when there's no census or anything like that, especially with the market.
Yeah, rental data is really difficult at best, and I've tried to I've tried to deal with various organizations about it. So what I try and do is talk to a lot of property managers just to try and get a sense of what's been happening. You know, and I do try and look at like some of the larger rental companies. So I don't have any specific numbers. What we've generally seen is the trend has been vacancy rates have been coming down. There's not a lot of supply. Rental rates have been increasing, and I've been hearing a wide range from, you know, 1-bedroom condos going for, you know, $2,000 a month, which is, you know, foreign to me, I guess, to a certain extent. But we're definitely hearing that those rates have increased a lot. And to me, I'm less concerned about that number, more about the spread and how it's shifted. And that is something that, you know, I think is been really consistent, is that rates have increased across all property types. And vacancy rates have dropped. And again, it really does coincide with what we're seeing on migration numbers, as well as the fact that we're seeing all these people come into the province. And should that continue, that's going to keep that rental market relatively tight. I did mention that there's a lot of new rental construction that's happening. Again, that product's not going to come on though for at least another year to 2 years before we see some of that stuff actually being complete. So I think we're still in a fairly tight sort of rental market for some time. So that could leave some rooms for some other gains.
Thank you. Really appreciate it.
Anthony?
Hi, everyone. How you doing? Thank you for the presentation. Fantastic information. Just have a question. So I'm calling from Ontario, and in Ontario recently, there's been incredible new legislation that's allowing a lot of people to turn their homes into triplexes in essence. So if you had a 2-story home, almost you can make every floor into a legal suite now. And then there's also opportunity for garden suites in Ontario. Is this going to happen in Calgary? Are we going to get to the point where you're going to be able to have 4 units technically on a property? You think that's somewhere that your provincial government is going to go down?
I think if they felt the pressure to, I mean, the difference in Ontario is it's very difficult for you to bring on additional supply. Whereas, especially in Calgary or regions just outside of Calgary, is we do have land availability in terms of construction. So there is definitely our city and our province are looking at different ways to increase density. It's been something that's been a part of our cities looking at doing that often to try and increase density. I don't think we're quite at that stage where it's every floor can be rented. I mean, I don't think we're quite there. There is a push to increase density even in our city. I think one of the differences and how much you see that will in part be dependent on land supply and ability to get new communities built. We still are seeing community construction. So I think as long as those options still exist, you'll see less pressure to do that over the near term. But there is a push from municipalities that they want to see much more density because it helps with affordability. Now, we don't have the same affordability challenges as some markets in Ontario. So but because we're starting to see that shift away from some of the lower price product and not having as much of that available, we could start to see them looking at other options like that as well. I just don't think that's going to happen in the next year, though.
Yeah, that's fair. I mean, it took a while for this legislation to get where it's at, but what it's doing, it's allowing a lot of investors to really gain that equity in their property, because now you've gone from possibly a 2-unit property, now you can technically make it 3 units, right?
Yeah.
So like if you're doing this in the GTA, your rents are astronomical, right? For each floor. But okay, thank you very much.
You're welcome.
Yeah, and just to add to that, I would agree with kind of what you said there. We don't have the same challenges. We have plenty of land. It's like you fly over Alberta, you can see how much land there is. And even if you live on the outskirts of Calgary right now, you could still easily work downtown. It's not like it's so far away that it's impossible to have both of those lives here, because we are such a smaller center in comparison. So the municipality like Calgary has been very much pro secondary suite, and there's been lots of programs and incentives for years now to for builders to build them and for landlords to add suites or legalize suites. So they are doing it in that respect, but not to that level of density. The concerns are often around parking and just, how would that possibly work? But I don't think we have quite the demand to need that level. But in Toronto, of course, absolutely, it makes sense.
Yeah,
well, and those, just those markets have, I mean, if you look at all the supplier, there was a lot of discussion and a lot of reports written on supply challenges. Most of the supply challenges that were discussed were really targeted towards the challenges that BC and Ontario are facing, because frankly, your population is much larger. And even though we've had an influx of people, I'm sure if you look at your immigration numbers, they're still likely much higher than what we're seeing here. So
that's true.
Okay.
Yeah, I think what's happened in a lot of the municipalities, the rules have been very relaxed and pulled back. So things like Natasha mentioned, even like parking and whatnot, those rules are gone. So there was a time when you had to accommodate for parking on the property, right? Within the property line. Yeah. So that doesn't exist anymore, right? You could almost have a legal suite in the middle townhouse of a block, right? It's I don't know how they do it, but they do it. Anyways, I appreciate the feedback. Thank you.
Yeah, no worries. Someone else have their hand up, and we're just after 7. I know we're kind of running over, Anne-Marie, but I don't know if you're okay for. I thought I saw one more hand.
Yeah, I'm fine.
Okay, all right. Maybe not. Was there someone else had their hand up? Oh, Steph.
I think Nina had a question at the end there.
Steph has her hand up as well. Nina asked, about possibly having a provincial tax. With the influx of immigration and job opportunities, is it possible, or what would trigger a provincial tax?
What kind of, like, are you thinking like a
Like
land transfer tax? I hear that's a no-go. Yeah, nothing that I'm hearing. So because I do work with our provincial association, I mean, we are, part of that is actually on the advocacy work. So working with, provincial governments, I'm not hearing anything that they're talking about any new taxes coming in, especially related specifically to housing, right? So I think the biggest concern is, will they bring in a land transfer tax? That's not what we're currently hearing. So, and we're the only province that doesn't have one. So,
yes, which is amazing. Talk about that all the time. Awesome. Steph, you got your hand up. You want to go next? Steph G.
Yes, sorry about that.
That's okay.
Great presentation. Thank you. I am in Ontario. Yes, we have land transfer tax. I am so glad Alberta doesn't. I just wondered about the new housing starts. Like, are they typically quick when something's approved, and then, how quickly do they get to build? Or is there any, delays, a lot of delays, or does things pretty much run smoother there than, let's say, Ontario?
well, I'm not exactly sure how long it takes on Ontario. What I do track, I look at, how CMHC tracks their starts. It does take a lot of time to actually get that product on, once they get it actually in the ground. Usually once it's started, then that really just follows through the process. Now, from my discussion with a lot of home builders as well, is that it's taking them longer because they're struggling with labor. So we're seeing that, that kind of construction time, especially for the higher density stuff, is now pushed out to kind of in that 20 months period. It hasn't been there for some time. So we're seeing those time take much longer. Detached homes are also taking longer. What used to be, as soon as that shovel was in the ground, it used to be 6 months. That's kind of extended into that 8-9 month window. So again, that's taking much longer than it used to. Now, in terms of getting it to the development, I know that there's been a lot of work within the city to try improving some of that process time. Things that they're looking at is, they had this growth management overlay, and that kind of delayed how long they brought on new communities. They are revisiting a lot of those policies now, in terms of seeing what they can do in terms of adding supply. But it does take a long time getting up to that stage of once the starts are in the ground. But what I was talking about in terms of time frame was really related to how long it takes for them to complete those projects. And that's really increased, just given the fact that they've had some struggles with even getting materials, like just,
Yes, yes,
yeah,
I understand.
that's been a struggle. So
I understand. Thank you, Emery. This was wonderful. Thank you so much.
You're welcome.
Danielle.
Hey there, I just wanted to say thank you so much. That was an awesome presentation, chock full of fantastic information. Are you hearing any whispers about government possibly putting limitations on how much you can raise rents after the 1-year period, as expenses are increasing rapidly? We certainly need to move with those times, but if it's limited to something like BC, I think is 2%, that would be problematic for sure in the rental market.
Well, we don't have rent controls for one. So we don't have that here to that extent. Now, again, it's not something, we're not well, they're not advocating for it because it comes with a whole other set of challenges. There's been a lot of information regarding if you're going to go to an environment with rent controls, and that actually can hurt your supply adjustments. So it's not an area that, I know that it's been discussed on an advocacy basis, and it's something that we've been talking to them about, saying like, this doesn't make a lot of sense. I'm not hearing it on their radar in terms of putting in any form of rent control, despite the affordability, because there is that issue of what happens to supply should they do that, because it does limit that investment into the overall market. When you have that, because it's harder to make your returns. So it is something that I don't feel is on their radar. We have, it's been brought up from many other organizations, and it's not something that they're looking at the moment. So that's something, again, we monitor if that happens, and we've been advocating against that for many reasons. So, and supply being one of them. we've seen
Thank
what happens when that tends to happen. So
Yeah, thank you very
Mhm.
much. Good to hear.
there's lots of ways they can, there's lots of ways they can dress affordable rental without having to go there. So I think that you might see more affordable rental programs come out, but not in the way of rent control. So
Perfect. Thank you.
Awesome. Thanks for your questions, everybody. Was there anyone else? I think we got everyone that had their hand up. I think we covered all my. So good. I don't have any questions, but that was absolutely fantastic. If anyone has any other questions, last chance. Amazing presentation. Yeah, like you are welcome to come back here anytime. We love it. Being investor focused, obviously it's all about the economics for us, and where are the people going, what are they doing for work, and where do they want to live, and that's what we are constantly talking about. So you gave us so much value today, and tangible information and advice that we can all implement into our strategies for this year. So much appreciated. And yeah, you got so many compliments for just how informative that was. So thank you so much.
well, thanks for having me. So happy to help best I can. So
Okay, well, we will wrap it up there. Let everyone go get their dinner, but thank you so much, everybody. As I said, we will send out the recording. If there's anything you can do, or if you want the tangible report, the PDF report that Anne-Marie put together, we can share that out as well. So if that's of interest, let us know. We'll get you a copy. But if not, we hope to see you at the next. Oh, actually, one note. Next month, we're going to have an in-person event. It's going to be March 15th, location to be determined, but it's going to be, topic is more of like financial sort of planning, planning for retirement, even first-time home buyers, how they can house hack and that kind of thing, and really take control of their finances. As we're all dealing with high interest rates and inflation together, it's important that we're all moving the needle on our financial goals. So we hope to see you there. So save the date for March 15th. It will be in the evening. And we're going to have some very special guest speakers actually flying in for that event. So can't wait to see you guys there. But that's it for this evening. So thank you so much, everybody, and have a good rest of your evening. Thanks again, Anne-Marie.
thank you.
Take care. Good night, everybody.